mentioned the euro crisis, you mentioned the COVID crisis. Why aren't people talking more aggressively about the current crisis, which is the growth crisis in Europe? Because until we realise in Europe we're in a crisis, we're not going to react properly.
I don't think we're in a crisis, but I do think we need to take action. So last year we had these great reports of Mario Draghi and Enrico Letta that speak about what Europe needs to do. Letta also mentions DSM, how we can be used, and we are part of this 1 trillion safe assets. So I do think we now have a wake-up call, and I do think we now really need to step up our game. So I agree with you, we are not in a crisis mode, but Europe needs to do more.
But Mario Draghi spoke of huge amounts of level in terms of investment, about 800 billion euros. That's huge. How can the ESM actually help in that context to fill the gap? Because when you think about the fiscal position of the European governments, it's very weak. So how can European institutions like the ESM actually step in this context?
So we can use the European institutions more. So the 1 trillion that we brought into the market last year is only 40% of what we can do. So the ESM has 430 billion of available capacity that can be deployed. The Next Gen EU still has capacity, and even EIB can be stretched more. So with this 40%, we still can do another trillion or 2 trillion if needed in new priorities. So we do have the cash, and that actually meets even Mario Draghi's requirements, because he speaks 20% of public money, 80% of private money. So with this public money on a European level, we actually can boost the economy.
Are you able to actually do that when you see the situation, the political situation in Germany and France so fragile at this stage? Or do you actually need to see a little bit more of momentum from the capitals themselves in order to get that job done?
If there is a wish, it is possible. And I've seen that in the last 15 years. When we had the euro crisis, Europe came together and put out billions, and we have 300 billion outstanding as ESM. Same with the COVID crisis. So when there is a real issue, Europe really puts money behind that.
Is Europe's problem the mindset, not the money? And I'll bring up DeepSeek out of China, because despite every single constraint and operating in a straitjacket, the Chinese still managed to come up with some groundbreaking technology that challenged the might of the United States, that had basically every capital market open to them, every available market to develop technology. Yet the Chinese have done it faster and cheaper. Isn't it just a mindset change that is required in Europe to get things done? Because it's not capital that's always the problem.
I think we are in that mindset change, and it's great you mentioned China and Asia, because one of the trends that I saw last year is that Asian investors are hugely coming into Europe. So if I look at our own books, they represent almost a quarter of the investors. That's the first time since 2011 when so many Asian investors came in, and also a third of central banks. So what I see is that from Asia there is really a lot of interest in Europe, and they want to invest in us. So then they see a growth perspective. And when I'm in Asia, they actually see a lot of potential in Europe for the future.
What's the motivation here for Asian investors? Is it the geopolitics, that they feel that the US market is not a friendly market to their capital these days? Is that why we're seeing more interest from Asian investors?
I think that's a great question. So for me, it's a combination of a few things. First, rates are higher in Europe, so that's attractive. Especially last year, rates came down, so that was investment-wise super interesting to buy European bonds. Secondly, we have safe assets, so they are highly rated, so they like that as well. And they want to diversify. They don't want to put all the eggs in one basket, so not only in US Treasury, but also bring them in European government bonds and institutions like ours, the ESM.
When you think about the latest comments from the European Commission, yesterday we had this competitiveness compass, the EU jargon. From a practical point of view, I was actually surprised to see that there's actually concrete timelines to achieve certain measures. But from a funding perspective, how are you reading this report? Is this ultimately the roadmap that you actually need to see in the European Union to have the bloc playing a critical role at the global level?
Yes, thanks, Sylvia. I think this report that came out yesterday is the implementation of the Mario Draghi and Letta report. So it goes in much more details how we are going to do it. And there's one aspect that I like about it is the Savings and Investment Union. So we see that in Europe we sit on a lot of cash. Our savings are much higher than in the US, and we invest them across the world instead of in Europe. So if you look at that, focusing that money to Europe, that's also what
But if I may just for a second challenge you on that, because it's not just about having the savings. Some people have the savings, but there's no instruments. So there's no harmonization on the European Union when it comes to actually giving the consumers a chance to invest. So how can you achieve that when you're not making it accessible for people, really?
You're right, and I think in the report it goes much deeper into how this money can go to the market. So I think we have some great products. We need to work on them. You're absolutely right. And also the Commissioner for Financial Affairs, Marie-Louise, she's also Portuguese, came out with ideas how we can do that. So I think the money can be moved into capital markets. There is still growth possible, but I'm really optimistic that we can make it happen.